Hello everyone, we would like to introduce the Chart Guys' newest course, Essential Candlesticks and the Patterns that they create. This is something that I, 9 years into my trading journey, take for granted. I look at a chart and I can instantly, subconsciously know what the candlestick shapes are telling me, the patterns that they are creating, and the market psychology that's going on behind the scenes to create those candlestick shapes. Obviously, I had to learn this at some point, and it was literally step number 1 of my technical analysis education journey was understanding what these candlestick shapes are telling us. So after going through this 12-hour course, you'll be able to understand why candlesticks are essential for trading success, develop your own ability to observe and react to the market trends and changes, develop an understanding of market psychology and how this phenomenon influences price action, as well as a whole bunch more. I'm going to link this website in the description of this video so you can check out more information for yourself. We've got examples of the modules and we break down exactly how this course is compiled. And essentially what it is a big chunk of book learning. So it's going to break down what these patterns are telling us: 2 candlestick bullish patterns, 3 candlestick bullish patterns, 2 candlestick bearish patterns, so on and so forth. Some live examples of those patterns playing out, and then tying it all together as to how we can use understanding these patterns to benefit our trading. My partner, Chart Guys Jason, goes through the meat of this course, breaking down all these individual patterns. I personally chime in with more abstract psychological topics of discussion, the art of observation, the psychology of a candle, and things of that nature. But we look forward to you checking this course out, and we appreciate your support as always. Have a great rest of your day. Hey everyone, checking in on the markets. We're going to start on the weekly time frames and zoom in from there. The bottom line, bulls are still in control. We had a bullish reaction in general to the tech sector earnings. Amazon was a bearish reaction, but very bullish Facebook, bullish on Apple. Still got Google to go, but getting through this thick of the major names in the earnings season. And we had a bullish reaction to the Fed on Wednesday. So what that gives us on this weekly time frame is a chart with the bulls still in full control. We know we're very extended at this point because we've been bouncing for 6 weeks with no consolidation. We have a wall of resistance approaching in the 280s, which is a triple top. And if we were to get up to those 280 resistance levels without weekly consolidation, again, we are extremely overextended. So I personally am going to be looking to establish a hedge position. And I personally am a day trader, so I don't have any long-term positions that I am hedging against. But I'm going to be hedging against my parents' portfolio because they have a lot of long positions. And I don't necessarily agree with how their financial advisors are managing their positions with no protection whatsoever. So I'm going to be doing it for them. So I'm going to be looking to scale in the mid 270s. We'll have to see how the week starts. We did get a little bit of indecision on the daily time frame. This indecision at the top of a bull move does favor the bears for a pullback and consolidation, but on SPY, anything above 261.79 keeps the bulls in full control. But if we do get up into those mid 270s, I am going to begin scaling in to a hedge position, anticipating that weekly consolidation is coming in the near term. If we lose the hourly uptrend, we're going to look for daily consolidation. And right now, it's the potential of a bearish reversal head and shoulders pattern. And if we have it here on without extended hours on, it's a little bit more clear. With extended hours, a little bit more choppy. But just for clarity's sake, here it is during regular trading hours where this would be the left shoulder, this would be the head. And if we can't break 271.20 on Monday and we come down and break 269.18 and 268.95, these two support levels, that would be a bearish break of the neckline. That would lose the uptrend on the hourly time frame, and that would have us zoom out to the daily and say, all right, now we're looking for a pullback on the daily, and we're looking for that higher low, at least initially, compared to 261.79. As far as, what fundamental catalysts are going to be behind a potential pullback, I don't know at this point. But I do know that we will likely see, regardless of what the fundamentals are, we're probably going to see some normal, healthy consolidation, and then perhaps it's the talking heads that, apply some kind of fundamental reasoning for that. I've seen that plenty of times in the markets where, you look at a chart and say, well, we were really overextended. We knew a pullback was coming. And then it's CNBC pretty much looking for a way to be able to explain that and express that to the general herd, the general public. And rather than saying, well, technically we're due for a pullback, that doesn't make sense to the vast majority of the herd. So they, apply certain reasons for things. And my all-time favorite will be the fact when Ebola was causing the market to dump. But regardless of that, the daily uptrend still has space to work with to consolidate and form a higher low. Everybody else looks pretty much the same. IWM, 6 weeks of the bounce, key resistance of 154.48 is approaching. Anything under that is a weekly lower high, keeping the downtrend intact. And the same for SPY as well. So let's not lose that sight. SPY is in a downtrend on the weekly time frame. The bounce at this point is massive, no doubt about that, but we have to confirm the trend change. We have to form a weekly higher low and a higher high. If we top out below 280, it's just a weekly lower high, keeping the bears in control. So we need a higher low and a higher high. If we get that, these are the two scenarios. A higher low and a higher high changes the trend, and we're looking back at all-time highs. If that does not happen, if we form a higher low, lower high, and then a lower low, we're heading back down to the December levels. So how the initial consolidation looks is going to be very telling, because if we pull back to 260 and that's it, that's a potential weekly bull flag, and we would be looking for likely continuation. If we pull back to 250, that opens it up for the potential of that equilibrium scenario and tightening range into March or April. So we're going to get a lot of information. Obviously, again, there's no sign of this consolidation right now, but we know it's coming, and we're going to get a lot of information when we see what's the volume behind that consolidation look like, how much pullback do we get, and where do we form that weekly higher low. So again, IWM the same, 154.48 is the weekly lower high, and on the daily time frame, for the bulls to maintain the uptrend overall, it's 145.37 to keep control. Indecision on Friday as well, and we'll see if the bears get any kind of follow through in the short term with a loss of the hourly uptrend. QQQ weekly time frame, same story. Resistance is 173.31. Anything under that is a lower high. Daily time frame, key level to maintain the uptrend is 160.99. Bulls have a lot of space to work with. Inside bar on Friday shows a tightening range. At this point, very healthy hourly consolidation, and we're going to have to see losses of uptrends on any of these names in order for us to say, all right, weekly consolidation is underway. Because if we keep these daily uptrends, weekly consolidation is not underway. XLF on the weekly chart, anything under 27.47 is just a lower high, keeping the downtrend intact. We have tightening up here, a little bit of a sideways range over the past week, and we can see that the most important levels, for me, the most important short-term support level is 25.71, and we pretty much formed a triple bottom there 3 out of the last 5 days, and now we have a double top at 26.17. So keep an eye on the financial sector. For any kind of meaningful pullback in the S&P 500, we have to see the tech sector and the financial sector and probably oil, all three pull back at the same time. If we only get, the tech sector consolidating and the financial sector stays strong, that consolidation is going to be very brief on the S&P 500, and that's the kind of scenario where we could get a potential, weekly bull flag or clear weekly higher low. So it's all about watching, in my opinion, the financial sector, the tech sector, and oil. And my sights Monday and Tuesday are going to be on the financial sector to see how we break this 6-day range that we have been within with multiple tops and multiple bottoms. VIX is still down at the low. 1549 is this key level because anything under that, there's a lack of support. And here we closed at 1608. So we're going to test that this coming week. And after 1594, we're looking down at 1138. So the bears are still in complete control. It's a very clear downtrend. The last daily lower high is 2042. Have to change the daily trend in order for us to say, all right, our weekly support level has been established and we're looking for a weekly bounce to take place. So no change in trend on the daily at this point. And again, just like the SPY bulls have space to consolidate and keep the uptrend, the VIX bears have space to see a bounce and keep this downtrend with 2042, the last lower high. Oil on the daily time frame, or this is the weekly, very brief consolidation and then continuation. So we've been looking out now for about 4 weeks for the potential of this head and shoulders pattern, and the consolidation was extremely brief, but you could call that a higher low. It is a higher low, not a clear right shoulder, but we briefly consolidated and then we saw strong continuation, breaking resistance. And once you break 54.54 on oil, there is no resistance nearby because of the dump we saw from 76.88. So if we zoom back to the daily time frame, we can see we got that brief consolidation that just ended up as a bull flag. We closed strong at the end of the week, and now the next resistance levels that we're looking at, look how much space we have, 57.93, and then the next level is up at 61.26. The bulls, to maintain strength, want to hold 53.41 ideally, but the most important level for me is 51.36. To keep the bulls in full control of oil, 51.36 is now our benchmark. Natural gas bears in full control as well. Red Marubozu candlestick on the weekly time frame, lower high and lower low breaking support. and now 2759 and then 2704 are the only support levels in sight. And here we are coming up to test those levels. So natural gas is very beat up, but we're not oversold on the daily. And we can see where have we bounced historically on this daily RSI. We haven't dipped clearly below 30 at any point in the last couple years. We have a dip right at 30. There's one just below 30, early 2017. But here's a bounce right above 30, right on 30, just above it, right on it. So here we are coming down towards that level historically where we've seen bounces, 33 daily RSI. And if we start this next week with a couple red days, get that daily RSI oversold, get that 4-hour RSI oversold, I'm going to start being interested in a natural gas position looking for a bounce. That being said, RSI alone for natural gas has not been a great indicator on the shorter term timeframes. This 4-hour RSI can get up to 90s and it can drop down to the teens. So just be aware that the only reason that I'll be interested bullish is if we have all these timeframes lining up with RSI. One time frame alone is not enough for me. I want, ideally, if I'm going to be real comfortable, I want the daily RSI oversold, the 4-hour RSI in the low 20s, and the hourly RSI oversold. But I'm going to be very picky because, again, we don't have to nail the bottom to get profit once we do see any kind of significant bounce. We will see a shift in trend. Remember last time when we were looking for this bounce where we got 25% in 3 days, we were consistently waiting for the 4-hour time frame to change the trend. And I was waiting and waiting and waiting for a week plus. We finally changed that trend, entered a position, and we did get significant bull follow through. So we can do the same thing. Let's watch this 4-hour time frame and watch for a trend change as we closed very weak on Friday. And we'll see if we get a trend change from daily oversold conditions. The 4-hour trend changing after the daily RSI hits 30 will be an early indication of a potential bounce starting to play out. So I'll be paying attention if those RSI levels get a bit more beat up. And it's all about the daily uptrend for these markets. I appreciate you watching. We'll check back in Monday after trading. Hope you have a good rest of your weekend.